What's up, Seniors Money Fam? Michael here with some huge news that could have a massive impact on the finances and quality of life for millions of Canadian retirees. If you're 65 or older and living in Canada, you'll want to pay very close attention to what I'm about to share. The Canadian government is considering implementing a new $2,000 per month old age security benefit for seniors. That's right, under this proposed plan, eligible retirees age 65 plus would receive up to $2,000 in additional income every single month from the government. Just let that number sink in for a moment. $2,000 extra dollars hitting your bank account like clockwork. For tons of Canadian seniors struggling to make ends meet on fixed incomes and rising costs of living, this could provide tremendous financial breathing room and peace of mind. We're talking money for groceries, medications, housing, transportation, and more. That $2,000 could be the difference between scraping by and actually being able to enjoy your golden years with some well-deserved financial comfort and security. Maybe you could finally take that dream vacation, fix up your home, or help support your family. Now, before you get too excited, it's important to note that this is still just a proposal being discussed by Canadian lawmakers. Nothing is set in stone quite yet, but there does seem to be growing momentum and support for getting some form of enhanced monthly income benefit for seniors across the finish line. Over the next few minutes, I'll dive deeper into all the key details we know so far about this $2,000 old age security payment initiative. I'll cover the eligibility requirements being proposed, how the money would actually get distributed, whether it would be taxable income, and much more. I'll also analyze the potential pros and cons, look at what senior advocacy groups are saying, and share my overall thoughts on whether this generous income supplement could realistically happen for Canadian retirees. Of course, with any new government program involving money, there are always lingering questions and fine print. What kinds of income thresholds might be involved? How would it impact other benefits like OAS and GS payments? Could it put further strain on the Canadian economy and tax base? These are all critical considerations that I'm going to unpack over the next few minutes. By the end, you'll have all the facts you need about this proposed $2,000 monthly payment to determine if it could directly benefit your financial situation as a Canadian senior. So stick around, because breaking down the potential $2,000 per month old age security benefit is just the start. I've also got tips on other ways you can supplement your retirement income, cut expenses, and make the most of your senior years in Canada. However, OAS is unique in that it is funded through general tax revenues rather than direct contributions during your working years. This makes OAS incredibly valuable for low-income seniors or those who didn't contribute enough to CPP during their careers to qualify for a substantial pension from that program. OAS can help fill those income gaps and, for many, makes the difference between struggling to get by or being able to afford basic necessities. OAS eligibility requirements. Of course, there are some key requirements you'll need to meet in order to qualify for the full OAS pension. Let's go over those criteria now. Age requirement. You must be 65 years of age or older to receive OAS. The government will automatically enroll you to start receiving benefits in the month after your 65th birthday. Legal status. You must be a Canadian citizen or legal permanent resident at the time your OAS pension is approved. Residency requirements. This is where things get a bit more complex. To qualify for the full OAS pension, you must have lived in Canada for at least 40 years after turning 18. This residency period does not need to be continuous. Now, I know what you may be thinking. 40 years is a long time. What if I don't meet that residency requirement? Not to worry, you may still qualify for a partial OAS pension. Your annual benefits will be prorated based on how long you did live in Canada after age 18. For example, if you resided in Canada for 30 years past age 18, you would receive 30/40ths or 75% of the full OAS pension amount. Every single year of residency counts, even if it's less than 10 or 20 years total. There are some exceptions as well. If you had to leave Canada for a period for work, study, or other reasons, those years can be deducted from the calculation and not counted against you. Additionally, there is currently an agreement between Canada and over 50 other countries that allows periods of residence in those nations to be counted towards your 40 years for OAS eligibility. This helps ensure that immigrants who split their lives between Canada and their home country are still able to access OAS. In summary, the age, legal status, and residency requirements are the three core criteria you'll need to meet to qualify for the OAS pension program. Let's now take a closer look at how your income level impacts the amount of OAS benefits you'll receive. OAS payment amounts. So now that we understand who is eligible for OAS, the next big question is, how much can you actually receive each month through this program? The amount you get in OAS pension payments is determined by three key factors. Your individual income level, whether you are receiving the guaranteed income supplement, if you are delaying receipt of OAS past age 65. Let's start with the maximum OAS payment amount for 2023. For those age 65 and older with an income below the threshold level, you can receive up to $668.20 per month from the basic OAS pension. This maximum payment changes slightly every year based on increases in the cost of living. The Canadian government reviews and adjusts OAS amounts quarterly to account for inflation and rising consumer prices. However, it's important to understand that if your individual income exceeds a certain threshold, then your OAS payments will be reduced through what's known as the OAS recovery tax or pension clawback. For the 2023 tax year, this income threshold where the recovery tax kicks in is $81,761. If you report total annual income above that amount on your tax return, then your OAS pension is reduced by 15 cents for every dollar of income exceeding the limit until it is completely phased out. To put some numbers around it, let's say your total income for 2023 was $95,000. Since that's $13,239 above the $81,761 threshold, your maximum OAS pension would be clawed back by $1,985.85, 13,239 x 0.15. This amount is deducted from the $668.20 maximum monthly payment. For high-income seniors, it is possible for your full OAS pension to be completely eliminated through this recovery tax. Critics argue this unfairly targets middle-class pensioners, while advocates say it helps make OAS more affordable for government to administer. Ultimately, your individual circumstances will determine if any clawback applies to you. Now let's talk about the Guaranteed Income Supplement or GS, which can significantly boost your monthly benefits from OAS for lower-income seniors. The GS is an additional non-taxable amount paid on top of the basic OAS pension for those with limited annual income. It is meant to ensure a minimum standard of living for Canada's most financially vulnerable seniors. For 2023, the maximum GS amount for a single childless senior is $985.94 per month. For couples where both spouses receive OAS and GS, the maximum combined payment is $1,667.76 per month. $985.94 x 2 equals $1,971.88 less a couple's reduction. Your specific GS payment will depend on your annual income level and sources, with lower-income individuals receiving the full amount and higher-income seniors potentially having their GS reduced or eliminated entirely. Lastly, you do have the option to delay receiving your OAS pension for up to 5 years past your 65th birthday. By doing so, you'll receive an increased monthly payment once you do start collecting. For every year you delay OAS past age 65, your future pension will go up by 0.6%, adding up to a maximum 36% increase if you wait until age 70 to start payments. So, for example, the maximum $668.20 monthly OAS amount in 2023 could reach $909 per month if delayed to age 70. However, I know the eligibility rules and payment calculations we covered today can seem quite complex. That's why I always recommend speaking to an accredited financial advisor or representative from the Canada Revenue Agency if you have any specific questions about your unique situation. They can review your income sources, residency history, marital status, and more to provide personalized guidance on the OAS amounts you may qualify for and how to maximize your benefits. Don't go it alone when these vital benefits are at stake. I hope this comprehensive guide has empowered you with a strong understanding of the Old Age Security Program and its potential impact on your retirement finances. Be sure to explore all the resources available to you as a Canadian senior through Service Canada and the CRA. You've worked hard your entire life, and you deserve to spend your golden years worrying more about enjoying hobbies, travel, friends and family, not constantly stressing over money. Accessing OAS is just one step towards that peace of mind, but an incredibly important one. So continue doing your research, connect with experts who can assist you, and take advantage of every program out there that can make life a little easier. You've earned that security. That's all for this video, but I'll be back soon with more essential money management and retirement planning advice for seniors. If you haven't already, go ahead and subscribe to stay updated on all my latest uploads. Thanks for watching, and I'll see you next time on Seniors Money.